Thanks for joining. Before we get started, please click subscribe to my channel and check out a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So if I were to ask you what type of commercial real estate is performing the best, you might say something that's very tech focused, like data centers. You might say something that's exciting, like multifamily housing or things like that people like to, you see all the headlines about rent growing. But you might be surprised that it's boring old warehouse space is the hottest type of commercial real estate in the market. And even in the challenging environment that we've seen lately, that still seems to be the case. If you remember, like halfway through 2022, Amazon came out and scared all investors because they said, we have too much warehouse space. That may be true, but it doesn't seem like it's true for every company. In fact, the opposite seems to be true. So Tyler, I know we've heard earnings from a few of the major industrial REITs. Prologis is the big one. We've also heard results from Rexford and Torino Real Estate. So you were telling me some numbers that kind of I would expect from a 2021 growth company, but we're seeing this in a relatively boring type of commercial real estate. So what are you seeing that's really blowing you away?
Yeah, I'm going to give the big overarching reason why we're seeing this here versus kind of the comments from Amazon, right? Like Amazon's warehouse space is generally pretty retailer focused or, consumer facing where like you have to, stock things for your customers being like you and me ordering things on Amazon. One of the big reasons that we're seeing industrial real estate warehousing do so particularly well is because of the, figuring out supply chains and what we're calling is more resilience in the supply chain. It's a fancy way of saying keep more things in inventory because when stuff gets weird, you just want to have it around so you can, sell to your customers. And that's a lot more of a business to business sort of thing. So you're seeing a lot of more inventory stocking of machine parts and components and a lot of the things that you kind of have to have around for value-added manufacturing, especially in the United States, where we're seeing a significant uptick in manufacturing activity. The reshoring of manufacturing in the United States is real. It's happening, and the supply chains are going to have to adjust for it. So that's why companies like Torreno, like Rexford Industrial, and like Prologis to a lesser degree because it's such an international company, but why the United States we've been seeing such incredible growth. So you were saying, huge growth numbers, right? I just want to put some numbers on this, which is really what throws it out here. Torreno Realty, kind of a smaller niche coastal real estate industrial player, their FFO per share was up 16.9% year over year. Like REITs, we're normally like in the 5 to 8 range. We're like, yeah, that's great, right? 16.9% is awesome. Rexford, 23.7% FFO over the year and increased their dividend by 20% in their most recent quarterly earnings numbers. Prologis's numbers are a little skewed because they made a huge acquisition in the year of Duke Realty. And so like it's hard to give a year over year comp on them, but rest assured their numbers look incredible as well. So this to me, I know like everything looks good until it doesn't in real estate because if things are growing, it looks good, but it's a cyclical market. You could have an overbuild risk. But looking at these numbers and looking kind of at the trends that we have been seeing in industrial real estate, I still see there being some tailwinds to push these companies over the next few years. And maybe not 16 and 23 kind of numbers, but above double-digit growth FFO per share for a REIT is awesome. And even though these are some of the lower yield businesses in REITs, I still think they're some of the better buys.
The yields certainly look a lot more attractive than they used to. So you also mentioned it's not just about consumer spending, which is the big concern with companies like Amazon. It's also inventory concerns. The supply chain challenges that we've seen in the U.S. in the past few years, where how many retailers missed out on sales because they simply didn't have enough inventory and were relying on suppliers to replenish it. Having double the warehouse space, lets you double your industry, and you don't have to care about supply chain issues quite as much. So a lot of retailers are kind of positioning themselves for the future. And then you have the logistics providers that also use these kinds of spaces like FedEx and DHL and things like that. And those businesses aren't really suffering. They're not seeing volumes decline very much. So I'm a big fan of these. And like I said, the yields are much better than they used to be on these.
Yeah, surprisingly, Rexford's actually it's its highest dividend yield in 7 years, despite
Wow.
throwing up 23% growth.
So if you were to just kind of make a call, would you say that investors should look at kind of a more national player like Prologis? I know a lot of people like the Sunbelt markets. A lot of people like the coastal markets like Toronto focuses on. Are you a fan of kind of the national approach or a more kind of secondary market approach?
It's not necessarily the markets. What impresses me, particularly about Rexford and Toronto, and those would be probably my two, is just management has been just fantastic job over the past 15 to 20 years, or sometimes shorter in Toronto's case, of just growing per share value of the business. There's so many REITs and so many kind of debt heavy issue equity kind of companies that become these empire builders where, they can throw up revenue and EBITDA growth through the roof. And everyone's like, that's fantastic. But they're diluting shareholders in the process and making, marginal return acquisitions. Toronto and Rexford have not been that. They have been able to grow and have been very, very good stewards of shareholder capital while doing it. And that's what impresses me the most and why I would choose them.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.